Hello everyone. I am Umer Quddoos Attari, Ph.D. Management Sciences, Associate Fellow of Higher Education Academy, UK. I have been serving as Assistant Professor, Permanent Faculty Member at the Department of Commerce, Bahauddin Zakariya University, Multan, Pakistan. My topic of presentation is the FinTech Revolution, the Cornerstones, Prospects, and Challenges. According to Yoshi Kawai, FinTech is a technologically enabled financial innovation. It is giving rise to new business models, applications, processes, and products. These could have a material effect on financial markets and institutions and the provision of financial services. The term fintech refers to the use of technology to deliver finance-related products and services in the areas of investment, insurance, banking, etc. Although Merriam-Webster added this term to its dictionary in 2018, the concept is as old as the signature verifying technology was introduced by banks in 1860s, while ATMs were also launched as fintech innovations. Anticipating this vital digital revolution, the father of modern management, Peter F. Drucker, emphasized upon the idea of the knowledge worker in the 1960s and described information as the oil of the 21st century in his book Management Challenges for the 21st Century. Examples can be cited that you can now open a bank account over the internet, link your account to your smartphone and use it to monitor your transactions. You can even turn your smartphone into a digital wallet and use it to make online payments from your account. Car insurance providers now sell telematics-based insurance where your driving is monitored by your smartphone or a black box fitted in your car to determine how much you pay for your insurance policy. In the future, it may be possible to buy insurance on a short term or pay as you go on this basis. The emerging trends in the fintech revolution are the digital payments, the profits, and coverage of the users. Digital payments are going to be the market's largest segment with an estimated transaction value of US dollar 8.488 trillion by 2022. The worth of every transaction by single user in the segment of new banking is estimated to be around US dollar 17,280 in 2022. The overall profits of new banking segment are estimated to rise by 42.2% in 2023. The total users of digital payments are estimated to touch the figure of 5.48 billion by 2027. Main elements of the fintech revolution include the payments and banking, data and analytics, financial software that springs up on the back of all such developments, platforms creation, the virtual markets, etc., and the potential benefits that fintech offers. Fintech products tend to be delivered online and so are easier and quicker for customers to access. Consumers benefit from a greater choice of products and services because they can be bought remotely regardless of location. Fintech companies may not need to invest money in a physical infrastructure like a branch network, so may be able to offer cheaper deals to consumers. Technology allows fintech companies to collect and store more information on customers, so they may be able to offer consumers more personalized products and services. The potential risks involved are the unclear rights. The fintech companies may be new to the financial industry and use different business models than their traditional counterparts. This can make it harder to ascertain which ones are regulated and what your rights are if something goes wrong. Making a rash decision. FinTech products that are bought instantly online without ever meeting anyone face to face may make it easier for consumers to make quick, uninformed, and rash decisions. The technology-based risks. Financial products bought online may have more exposure to risks. For example, your personal data could be misused or you could fall victim to cyber crime. And lastly, not the least, while technology increases choices and access for more consumers, it can exclude those who don't know how to use the internet or devices like computers, smartphones, and tablets. The FinTech cornerstones comprise the phases of digital transformation. These are digitalization, and digital transformation. Digitization is the process of converting physical analog information into digital binary information, storing physical financial records into Excel sheets. It is mainly concerned with the transformation of information and not the processes, thus not altering activities that generate the business value. Digitalization means the use of digital technologies to change a business model and provide new revenue and value producing opportunities. And digital transformation refers to the impact caused by digitalization and is the most widespread phase affecting the stakeholders, business processes, strategic goals, and organizational structure. It either changes the existing business models or adds new ones to create and enhance the business value of the organizations. Now, the key players in the FinTech revolution are the incumbents, relatively well-established financial institutions such as Allstate, Bank of America, Barclays, HSBC, etc. Secondly, the companies that provide technology or infrastructure that facilitates the services, utilities, and transactions such as Nasdaq, First Data, Fiserv, MasterCard, etc. Disruptors, the fast-moving companies, often startups, focused on a particular innovative technology or process, such as Lemonade Insurance, Multan Retail Banking, Prosper in the peer-to-peer lending, Betterment in automated investment, and Stripe in the mobile payments. And the corporate tech giants involved are the fourth. They provide services and include the Twitter, Facebook, Google, and Apple. The FinTech components are of two types. The two classes are on the basis of services and the technology. These service-based are the payment transactions, the enterprise with business models or core business involving use of distributed ledger, blockchain technology, or cryptocurrency for payments. Secondly, the personal finance. These companies offer technology-driven services to enhance retail customers' finances and savings, credit scores, spending, or tax liabilities. The InsurTech are employed by the companies to boost promptness, competence, accuracy, and convenience of processes across their insurance value chain. This includes insurance telematics, quoted comparison websites, insurance domestics, and for home automation, corporate platforms, claiming the software, online brokers, cyber insurance, etc. And RegTech, on the fourth, offer technology-driven solutions to expedite reporting and streamline the compliance with the regulations and to safeguard against the fraudulent cases. Now, the technology-based segments are blockchain or cryptocurrency. It is a vital medium of exchange, created and kept electronically in blockchain, distinct from other currencies. Secondly, the process automation, RPA. It enables banks and other financial institutions to control data, process transactions, trigger responses, and communicate with other systems. Third, the artificial intelligence. It uses data science and machine learning to develop personalized products for consumers. Data analytics. The predictive analytics can help fintech companies to provide customers with an individualized experience. And aerial vehicles are unmanned aerial vehicles are used for the emergency purposes and guided by the technology. Now, the challenges that are faced by the fintech and the key drivers, the researchers envision that fintech could peak during 2025 and even keep flourishing by 2030. Significant use of mobile devices are the topmost drivers of fintech revolution. And secondly, the heavily investment by the firms and financial institutions in the technology-related solutions. The e-commerce boom has enabled the fintech revolution towards its peak, and increasing demand for cryptocurrency is the fourth main driver. And rising need to eliminate the financial crimes, corruption, and especially the white-collar frauds are on the fifth. The challenges ahead, as the fintech services mainly depend on the data. Presently, it is vital for financial institutions, online traders, and insurance companies, etc., to shift towards data-driven fintech. Also, the vital aspects of financial stability, such as strict regulation, security, and ubiquity must be considered seriously. Further, the Nakashima suggests that fintech must support the availability of products and services, targeting the mankind's sustainable survival. Another study by Merban et al., surveying latest fintech enablers and developments, has identified the security issues, future challenges, and the related measures. Now, the main challenges to the fintech developments are the sustained quality of the product or service offered. It may be very common in the developing countries or LDCs where the infrastructure is not very much developed. And secondly, the connectivity, the soundness of support services and systems. And third, the uncertain regulatory principles and frameworks and lack of diverse blockchain applications may be delaying the growth of market during the forecast period. Financial firms, both old and new, have to invest substantial time and resources to certify that they comply with the new laws. And next, the funding of the cyber attacks is another paramount challenge faced by the firms and governments all over the world. Given the complex nature of the client data that companies store, this is a severe concern for fintech firms. Cyber criminals are hurling more frequently and sophisticatedly attacking. It is quite evident owing to the fact that the number of data breaches had amplified in the year 2018. And fintech firms are lagging much behind when they are compared to their traditional counterparts. They lack the human touch. Their functional models often leave clients feeling like they are dealing with a faceless entity. And the last but not the least, dealing with the big data. Dealing with the huge number of transactions per unit time, say per second. Typically, the amount of big data generated by 10,000 transactions per second needs fast processing, and deletion of data, that is the cleaning, requires very quick and working in a very short time. So all these challenges are still ahead to streamline the fintech developments. And What does the FinTech hold for the future? Despite the current economic uncertainty, larger and long-term trends for the future of FinTech remain relatively intact. Consolidation, partnerships, and continued collaborations between legacy banks and FinTech seem imminent. And consumers can probably expect to see the continued emergence of companies touting shiny, headline-worthy services, including the blockchain, cryptocurrency, artificial intelligence, and peer-to-peer transactions. And regarding the bottom line, FinTech is now so pervasive in financial services provisions that consumers, businesses, and all sorts of financial service firms are increasingly turning to imaginative combinations of software, hardware, and data to create and deliver both new and traditional financial products and services. FinTech is firmly entangled in the fabric of our financial society, and it appears that its influence will only grow in the future. Thank you and goodbye.